Welcome to the Deep Dive. Today, we are undertaking a really focused mission. We're looking into a company that's attempting something pretty audacious, I think it's fair to say.
Audacious is a good word for it.
They're trying to build, effectively, the world's largest cellular network, but entirely in space, in the low Earth orbit.
Yeah.
We were diving deep into AST SpaceMobile, ticker ASTS. Now, they're technically a pre-revenue satellite tech company founded back in 2017, but the vision, that's anything but small.
No, the vision is huge. It's simple to state, but incredibly complex to actually pull off. Basically, they want to be the very first to offer space-based cellular broadband directly to standard, unmodified mobile phones globally.
Right, and that unmodified part is key, isn't it?
Absolutely key. Think about that. We're not talking about those clunky old satellite phones or, special cases with antennas sticking out.
Yeah.
We're talking about the phone that's in your pocket right now, your standard iPhone, your Samsung Galaxy, whatever it is, getting, say, a 5G signal directly from a satellite hundreds of miles up.
It sounds almost like science fiction. And the core problem they're tackling, it's something we've all felt, right? Just maybe on a smaller scale.
Oh, yeah. Those dead zones.
Exactly. Those incredibly frustrating dead zones. Traditional cell networks, they rely on towers on the ground. And the second you step outside a populated area, maybe you're hiking, maybe out on a boat, or just driving through the countryside.
Signal vanishes. Poof.
Gone. And ASTS is aiming squarely at that massive gap.
It's enormous. If you actually look at the numbers, something like 42% of the world's population still doesn't have cellular broadband.
42%. Wow.
And maybe even more staggering, 90% of the Earth's surface has no cellular coverage at all. Think oceans, deserts, mountains.
90%. That's the critical gap they're aiming to fill.
That's the mission.
And if you solve a problem that big, the potential market, it's got to be huge. Management estimates the total addressable market, the TAM, for this kind of universal connectivity, getting rid of all coverage gaps.
That's astronomical.
They put it at $1.1 trillion.
Annually. Yeah, it's trillion with a T. That kind of number, well, it helps explain why they're willing to take on the massive, massive capital risk involved.
The stakes really couldn't be higher. And that defining feature, the thing that really sets them apart, technically speaking, from past attempts or even current competitors.
It's that direct-to-device piece, seamlessly.
Right. Delivering 4G, even 5G broadband straight from low Earth orbit LEO satellites directly to your standard phone.
No special firmware updates needed, no little dongles you have to plug in. The idea is it should feel just like walking from one cell tower's coverage area into another. Seamless handover.
Okay, let's try and unpack the physics here for a minute, because this is where I think a lot of the skepticism naturally lies.
Sure, that's a fair question.
Connecting your phone to a tower nearby, that's, established tech. But we're talking about linking this tiny handheld device. What does it transmit at? Like 200, 250 milliwatt?
Yeah, incredibly low power. Quarter of a watt, maybe.
Linking that tiny signal over hundreds of miles to a satellite that's whipping around the Earth at thousands of miles per hour. How on earth do they overcome that basic power distance problem? The physics seems stacked against them.
It really is the core engineering challenge.
Yeah.
And you're right, that smartphone signal is incredibly weak. Trying to pick that up from orbit, it's like, I don't know, trying to see a single candle flame from miles away.
Okay.
So the only way to reliably grab that incredibly faint signal and then beam high-speed data back down is basically through brute force size on the satellite side.
So the satellite has to compensate.
Exactly. Their solution is to deploy these absolutely enormous LEO satellites. They essentially act as giant cell towers floating in space. And the key is these huge phase array antennas they carry.
Huge meaning. Really huge.
Really huge. We'll get to the specifics, but yeah, the satellite itself needs an incredibly large, incredibly sensitive receiving area to make up for the phone's tiny power output.
So they're overcoming the handset limitation with just unprecedented scale in orbit. That's the idea. And crucially, they've actually proven this works, which is what really shifted the conversation, I think, from just a theoretical cool idea to, okay, this might actually be an engineering reality.
Right, the proof of concept. That was BlueWalker 3, wasn't it? BW3.
That's the one. BW3 was their initial testbed satellite, launched back in 2022.
And what did it actually look like? Was it already massive?
Oh, yeah. It was startlingly large for a commercial satellite. When BW3 unfurled itself in orbit, it deployed this antenna array that measured 693 square feet. That's 64 square meters.
693 square feet. That's bigger than my apartment.
Right. To give you some context, that was the largest commercially used antenna array of its kind ever deployed. The only thing bigger, really, is the whole International Space Station structure.
Okay, so it's a massive, probably quite delicate piece of engineering they had to get unfolded perfectly in space.
Exactly. A lot could have gone wrong just with deployment.
So it deploys successfully. Then the big question, did the physics actually work? Did it connect to a regular phone?
It absolutely did. That was the breakthrough moment. In early 2023, ASTS achieved the world's first space-based two-way voice call.
A voice call. From space to a normal phone.
A two-way voice call and also a data session. Using completely standard, off-the-shelf smartphones, they specifically mentioned using a Samsung Galaxy S22 and an Apple iPhone. No modifications.
Wow. Okay, so that really validated the core premise, didn't it? Especially that difficult bit, the uplink from the low-power phone to the satellite.
Precisely. That was the highest hurdle technologically. Showing that uplink worked, that was huge.
But, proving basic connectivity is one thing. A scratchy voice call isn't going to support a trillion-dollar market, right? Did they demonstrate actual usable speeds, commercial-grade speed?
Good point. And yes, they did. Initially, they were demonstrating download speeds somewhere between 10 and 14 megabits per second, using 4G LTE protocols.
10 to 14 megabits. Okay, that's actually pretty solid. You can stream video, browse the web, do most things with that.
Definitely usable broadband. And then later in 2023, they followed up successfully completing a 5G call as well.
So they hit both 4G and 5G milestones with BW3.
Correct. And that combination really de-risked the core technology significantly. The conversation started shifting away from, can this even work, towards, okay, how do they scale this up?
Right, scaling. That's always the next mountain to climb, isn't it? Especially in space. Which brings us to the next generation of hardware. The Block 2 BlueBird satellites, the BB2s. These are the ones intended for the actual commercial service.
These are the workhorses, yeah.
If BW3 was already huge at nearly 700 square feet, how big are these new ones going to be?
They're scaling up massively. The plan for the BB2 satellites is for them to be more than 3 times the size of the Block 1 BW3 design.
3 times?
Yeah, deploying to approximately 2,400 square feet.
2,400. That's enormous.
It's gigantic for a satellite. This jump in sheer physical size, it's needed not just for the signal reach, but critically for the capacity to handle potentially millions of users connecting simultaneously across its coverage area. John Joyce, one of the VPs at ASTS, he put it plainly, saying these satellites are massive relative to the space industry.
And I assume the upgrade isn't just making the antenna physically bigger. There must be more processing power inside too, right, to handle all that traffic?
Oh, absolutely. And this speaks to their strategy of vertical integration. The BB2 satellites are going to incorporate AST's own novel proprietary ASIC chip.
ASIC. Application-specific integrated circuit.
Exactly. A custom-designed chip. This thing is a beast. It's designed specifically to support up to 10,000 megahertz. That's 10 gigahertz of processing bandwidth per satellite.
10 gigahertz per satellite. Why is that such a big deal?
Because it lets the satellite manage thousands and thousands of simultaneous connections. It can handle massive amounts of data flowing through it very efficiently. That processing power, combined with the antenna size, is what they expect will deliver peak data speeds of up to 120 megabits per second per cell.
120 megabits. Okay, now that's seriously competitive. That's faster than a lot of home internet connections in many places.
It's definitely aiming for a premium experience, not just basic connectivity.
But, okay, designing it is one thing, building it is another. Now we hit that manufacturing challenge, going from one successful prototype, PW3, to needing a whole fleet of these, 45 to 60 massive, complex machines. And they have to work perfectly. This is where so many ambitious space ventures stumble, right? The production hell phase.
You nailed it. That transition from the lab to a high-volume factory floor is incredibly difficult. They are right in the thick of that now. They do have 5 fully functional Block 1 satellites deployed already, which is good experience. But all the focus now, the real energy, is on scaling up for Block 2. And to try and manage that scale, they're kind of pre-manufacturing key components.
Like what?
Well, they've already completed the assembly of these specialized components they call microns. These are for the phased arrays of the first 8 Block 2 satellites.
Microns. Can you explain what those are? Why is building them a bottleneck?
Yeah, think of a micron as like the fundamental building block, the tile of that huge phased array antenna. It's this complex little microchip assembly containing the electronics that allow the antenna to electronically steer the cellular beams, shape them, focus them.
So it's not just a dumb dish, it's intelligent.
Highly intelligent. And manufacturing these tiny, intricate electronic modules reliably by
Yeah.
the thousands, and then integrating them perfectly into this massive structure that has to fold up for launch and then unfold flawlessly in space. It requires incredible precision, quality control, and just sheer manufacturing capacity.
Okay, so getting ahead on micron production is key.
Definitely. They're saying they expect to have the equivalent of 40 satellites worth of these microns manufactured and ready by early 2026, which shows they're really trying to de-risk that specific hardware supply chain before they get into the final crunch of assembling the full satellites.
That makes sense. So what's the timeline they've laid out? It sounds incredibly ambitious. What should listeners be watching for in terms of deployment?
It is extremely aggressive, no doubt about it. The goal is to deploy between 45 and 60 of these Block 2 BlueBird satellites during 2025 and 2026.
45 to 60 in 2 years.
Yeah. The absolutely critical first one, the first next-gen satellite, known as FM1, is currently expected to be ready to ship out for launch in August 2025, so very soon.
August 2025 for the first BB2.
And to get that many satellites up requires a high launch rate. They're anticipating needing at least 5 orbital launches just by the end of Q1 2026, so roughly 1 launch every 1 to 2 months on average, starting later this year or early next.
Wow, that launch cadence is staggering. It really sounds like they're just throwing everything they have into getting these things into orbit as fast as possible. Is there a specific number of satellites they need up there to become, financially stable?
Yes, there's a key milestone they talk about. Management has stated they aim to reach cash flow break-even, meaning the network starts generating enough revenue to cover its own operating costs before major growth spending once they have 25 satellites successfully operating in orbit.
25 satellites for break-even. And when do they expect to hit that number?
Their target for hitting that 25 satellite constellation and thus reaching that break-even point is around Q1 2026.
Q1 2026. So roughly 18 months from now. That 25 satellite mark sounds like the absolute minimum viable constellation for them to prove the business model can work financially.
It's the critical number for near-term sustainability, absolutely.
Okay, achieving that kind of rapid production and deployment, it really demands tight control over everything, doesn't it? The supply chain, the manufacturing process, which explains their strategy of vertical integration. What does that actually look like on the ground for ASTS?
Yeah, it's quite reminiscent of how, say, Tesla approached things in their early days, building up manufacturing. ASTS claims they are about 95% vertically integrated in their manufacturing process.
95%, what does that entail?
It means they control almost everything. The design of that proprietary ASIC chip we talked about, the complex software layer that runs the satellite and the network, and, of course, the highly specialized assembly of those massive satellite panels and integrating the phased array microns. They essentially own the entire tech stack from silicon design up to orbital operations.
Which is probably essential when your technology is so unique and you need to build it at an unprecedented scale and speed.
Exactly. You can't just outsource the core components when nobody else makes them.
And owning that process means investing heavily in the facilities to do it. Where are they actually building these things?
They've been pouring capital into their physical infrastructure. The main hub seems to be the Midland, Texas facility. They put a $300 million investment into expanding that site, specifically targeting that production rate goal. 6 satellites per month by late 2025.
6 satellites a month. That's the cadence they need to hit that Q1 2026 break-even target.
Precisely. And Midland isn't the only place. By the end of 2025, they expect their total manufacturing footprint to grow to over 400,000 square feet, spread across facilities in Texas, but also Spain and Florida.
400,000 square feet. Okay, this isn't a small operation anymore. This massive investment really confirms they're all in on industrializing this process.
Absolutely. And, this manufacturing ramp-up ties directly back to that leadership shakeup we saw in mid-2024.
Right, the strategic pivot.
Yeah, the realignment. Putting Scott Wisniewski into the president role, bringing in Shanti Gupta as COO, Andrew Johnson taking on CFO and chief legal officer duties. That wasn't just shuffling deck chairs.
Yeah.
It was a very deliberate signal, an organizational shift away from being primarily an R&D company focused on testing towards becoming an operational infrastructure company focused squarely on manufacturing scale-up, deployment logistics, and ultimately commercial execution and revenue.
Moving from invention to production and sales.
Exactly. The priorities shifted.
Okay, so they're building the hardware, huge challenge. But building satellites only half the equation, maybe less. You need customers, millions of them. So let's talk about their commercial model, business to business, right? B2B. And this global partnership strategy seems absolutely central.
It is arguably their smartest strategic move. They made a very conscious decision not to compete with the big mobile network operators, the MNOs, your Vodafones, the AT&Ts, Verizons of the world.
Instead of competing, they partner.
Right. ASTS integrates its satellite network, so it acts as a seamless extension of the MNO's existing ground-based network. When you lose terrestrial signal, your phone would ideally just switch over to the satellite link provided via your existing carrier.
So ASTS becomes a wholesaler of coverage, essentially.
In a way, yes. And this approach instantly turns potential very powerful adversaries into crucial distribution partners. It solves the enormous challenge of how you acquire hundreds of millions of customers, how you bill them, how you provide customer service. The MNOs already do all that.
That's clever. And the sheer scale of the partnerships they've already announced, it's kind of staggering for a company that hasn't even launched its commercial service yet.
It really is unprecedented. They currently boast commercial agreements or joint ventures with over 50 carriers around the globe.
50.
Over 50. And we're talking the biggest names. Vodafone, AT&T, Verizon, Rakuten in Japan, Telefonica, Orange. The list goes on. And critically, the combined subscriber base of these partners covers nearly 3 billion people worldwide.
3 billion potential users accessible through their partners from day one, potentially.
That's the power of the model. It grants them an immediate, potentially global footprint the moment they turn the service on, region by region.
Can we look at a couple of examples just to see the depth of these partnerships? You mentioned Vodafone.
Yeah, the Vodafone partnership is particularly interesting. In Europe and Africa, they actually formed a joint venture called SatCo, and the interest level seems high. SatCo has apparently already received expressions of interest from mobile operators in 21 out of the 27 EU member states.
21 EU states showing interest before launch.
Right. And that specific agreement includes guarantees for service provision running all the way out to 2034. That's not a casual MU. That's a serious long-term institutional commitment.
That's significant. And it's not just the consumer mobile market they're validated in, is it? There's the defense side, too.
Yes, and that's also very telling. Getting contracts from defense and government agencies speaks volumes about the perceived reliability and capability of the platform.
What kind of contracts do they have?
ASTS currently has 6 active U.S. defense contracts. These seem focused on validating the platform for things like tactical communications, secure links for military users with standard military mobile devices, going beyond just consumer broadband.
Okay.
There's a significant $43 million contract with the Space Development Agency, the SDA, and also a newer $20 million contract with the Defense Innovation Unit, or DIU. They've already successfully demonstrated this kind of non-terrestrial network connectivity for defense applications. It proves the system works in high-stakes, specialized environments, not just for watching Netflix.
And it potentially opens up another revenue stream down the line.
Definitely. Government services could be a very lucrative vertical.
Okay, so they partner with MNOs, leverage their customer base. How does the money actually flow? Let's look at the monetization, the revenue sharing model.
It's designed to be a win-win, or at least that's the pitch.
Yeah.
For the MNOs, it's not just about new revenue, it's also about cost savings. We saw an estimate that for every $1 of this direct device revenue an MNO generates through ASTS, they could save up to $1.50 in capital expenditure and ongoing costs, like tower leases.
Because they wouldn't need to build or maintain expensive cell towers in those really remote, hard-to-reach areas anymore.
Exactly. Providing coverage in rural or difficult terrain is incredibly expensive with traditional towers. Satellites become much more economical for those areas.
That $1.50 saving for every $1 revenue is a powerful incentive for the MNOs.
It really helps align interests. Now, in terms of what ASTS actually gets, it generally works on a revenue split, often around 50-50, though it can vary.
Okay.
So let's say there's a supplemental service. You, the user, opt in to pay maybe $10 or $15 a month extra on your bill to have satellite backup coverage whenever you leave the terrestrial network.
Like an add-on plan.
Right. In that scenario, after the MNO takes its share, ASTS might retain somewhere in the range of $5 to $7.50 per user per month.
Okay, $5 to $7.50 per sub per month for the premium service. What about basic coverage in areas where there was just nothing before?
In those truly unserved or underserved markets, the MNO might charge a much lower fee, maybe just $1 a month. just to provide basic connectivity.
$1 a month.
Even then, after the 50-50 split, ASTS would still be claiming around 0.50 cents per user per month.
50 cents doesn't sound like much.
Per user, no. But the key here isn't the margin per user, it's the potential volume. Remember those 3 billion subscribers covered by their partners? Even capturing a small fraction of those at 50 cents or a few dollars a month adds up incredibly quickly.
Right, the scale makes the small numbers big.
Exactly. It's a volume game. If you run some projections, say they managed to reach just 12 million supplemental users globally, paying that average $10 a month by 2030.
Okay, 12 million users.
That alone, based on that $5 to $7.50 take for ASTS, could yield them somewhere between $720 million and over $1 billion in annual revenue.
Just from 12 million subscribers on the premium plan.
Yeah. And that's why you see these massive projections from analysts sometimes, like Deutsche Bank forecasting potentially $5 billion in annual revenue for ASTS by 2030. That assumes much wider adoption, of course, but it shows the scale of the opportunity if they execute.
5 billion. Okay, but that's 2030. That's still years away.
Yeah.
Right now, today, ASTS is fundamentally spending money, not making it. They're a CapEx machine. We have to address the pre-revenue reality and the huge cash burn needed to build this constellation.
Absolutely. That cash burn is, without doubt, the primary risk factor for investors right now. Building satellites and launching them is incredibly expensive.
So how are they funded? Do they have enough cash to actually get this built?
Well, management has actually been remarkably successful so far at securing the funding needed for this critical deployment phase. As of the end of June 2025, looking at it pro forma for recent financing, they reported having over $1.5 billion in liquidity. That's cash, cash equivalents, restricted cash.
$1.5 billion. That's a serious war chest.
It provides substantial breathing room to execute the plan.
How did they manage to raise that much? Especially as a pre-revenue company in a tough market.
They've been active. In the first quarter of 2025 alone, they executed a convertible note raise and also used an at-the-market, or ATM, equity offering. Those two moves brought in a combined $458 million in cash.
Nearly $500 million in one quarter.
Yeah, it boosted their cash position by something like 43% compared to the end of the previous year. And they've also set themselves up for more potential funding by putting a new $500 million ATM facility in place, giving them flexibility. Plus, they're actively exploring non-dilutive options like government-backed financing to stretch that runway even further.
Okay, the ATM facility is good for flexibility, but it does mean the risk of shareholder dilution is always there if they need to use it heavily.
True. Equity raises are dilutive.
But looking at the overall balance sheet health, assets versus liabilities.
They seem to be managing it carefully. Total assets reported were around $1.37 billion compared to total liabilities of about $603 million. And interestingly, they recently took proactive steps to clean up their debt, repurchasing $225 million worth of their convertible notes.
Why do that now?
Likely to reduce the overhang of that debt and, importantly, lessen the future cash burden from interest payments. It suggests they're really prioritizing a clean balance sheet to maintain access to capital markets for this high-spend period.
Okay, so the balance sheet looks reasonably managed, but let's drill down into that cash burn rate, because $1.5 billion is a lot, but it can disappear quickly if you're spending hundreds of millions per quarter. What were the operating expenses and, more critically, the capital expenditures like recently?
Operating expenses, OPEX, have been rising, which you'd expect as they ramp up hiring for production and commercialization. Adjusted OPEX went from about $45 million in Q1 2025 to nearly $52 million in Q2, or about $46.5 million if you adjust for some one-time transaction costs. Manageable growth there.
Right, staffing up costs money. But the big number is the CapEx. The spending on the actual hardware and facilities.
That's where you really see the pivot to execution.
Yeah.
Capital expenditures saw a huge but necessary jump. CapEx went from $124 million in Q1 2025 up to $323 million in Q2 2025.
Wow, nearly tripled in one quarter.
Yeah, and that massive increase is almost entirely driven by investment in property and equipment, basically, the satellites themselves and the factories needed to build them. It clearly shows they are past the main R&D phase and are now fully committed to industrializing the Block 2 production line.
Okay, so let's do the math roughly. They're burning maybe $50 million a quarter in OPEX, plus now over $300 million in CapEx. That's close to $400 million per quarter.
In that ballpark, yes. although CapEx might fluctuate depending on build cycles.
Even with $1.5 billion in the bank, that runway isn't infinite at that burn rate. It really underscores how critical hitting that 25 satellite break-in point by Q1 2026 is. It feels essential for their survival without needing another massive, potentially very dilutive fundraise.
It is absolutely the single most important metric to watch over the next, say, 12 to 18 months. Any significant delay in that launch cadence, any satellite failures requiring expensive replacements, that would directly accelerate the cash burn and likely force them back to the capital markets, possibly on unfavorable terms.
So the runway looks adequate if, and it's a big if, they maintain this incredibly aggressive, flawless execution schedule.
That's the crux of it. The moment they hit major turbulence, launch delays, production issues, satellite malfunctions, that financial clock starts ticking much, much faster.
Okay, high stakes on execution. Let's pivot now to the competitive landscape. Because in space, especially now, you are definitely not alone. Everyone seems to be looking at this direct-to-cell market. What is ASTS's key moat? What keeps them relevant against potentially much larger players?
The moat fundamentally remains that unique combination we discussed. The proprietary, very large phased array antenna technology, coupled with the ability to connect directly to standard unmodified mobile devices using standard cellular frequencies, the 3GPP standard.
That frictionless adoption pathway for the end user.
Exactly, because it eliminates the need for consumers to buy expensive new hardware or for carriers to subsidize it. That's a huge advantage in terms of market adoption speed and cost.
But the elephant in the room, or rather the Starship in orbit, is Starlink.
Right.
Owned by SpaceX. They already have thousands of satellites up there, a massive existing constellation, huge resources, and they are absolutely targeting direct-to-cell. How can ASTS, with basically zero commercial revenue today, possibly compete with that? Doesn't Starlink just win by default?
It certainly looks like a David versus Goliath situation if you just count satellites in orbit. Absolutely, Starlink has a massive head start there. But the technical reality, especially regarding how they connect to phones, is more nuanced.
Okay.
While Starlink is definitely pursuing direct-to-cell, ASTS currently possesses a specific and potentially crucial technical edge related to spectrum.
Spectrum again. How so?
ASTS's satellite design allows them to effectively utilize the low-band cellular spectrum. Specifically, those critical bands already licensed and used by major carriers, like AT&T's 700 MHz band, which includes FirstNet, and Verizon's 850 MHz band.
Okay, the lower frequency bands. And Starlink, they can't use those. Why is that so important?
Starlink's current satellites and their planned direct-to-cell approach relies more on higher frequency bands, like PCS spectrum. Those higher frequencies are great for capacity, they can carry a lot of data, but they're inherently worse for reach and penetration.
Right, lower frequencies travel further and go through buildings and things better.
Exactly. That's why those low bands, the 700, 850 megahertz spectrum, form the backbone of existing terrestrial cellular networks, especially outside dense urban cores. They provide that wide area coverage. ASTS's ability to tap into the MNOs' existing licensed low-band spectrum is a massive technical advantage.
So ASTS can basically act like another cell tower, using the spectrum the MNO already owns and uses for wide coverage.
Precisely. And that technical capability, which Starlink currently appears to lack for these specific crucial low bands, is arguably what allowed ASTS to secure those landmark partnership agreements with giants like Verizon and AT&T in the US. It's a significant competitive barrier, at least for now, regardless of Starlink's sheer number of satellites.
That's a really key point. So it's not just about having satellites. It's about having the right kind of satellites that can use the right kind of spectrum for seamless integration.
That seems to be ASTS's core technical argument.
Okay, beyond the Starlink behemoth, who else is potentially competing in this direct-to-device space?
While you have Amazon's Project Kuiper, that's another planned large-scale AO constellation, but they're significantly behind ASTS in terms of deployment and demonstrated D2D testing.
Still mostly on paper for DTD.
Pretty much. Then there's the existing partnership between Globalstar and Apple for the iPhone's emergency SOS feature.
Right, the emergency tech.
Yeah, but that's very limited functionality, emergency use only, low bandwidth, and it often requires the user to specifically point the phone at the sky. It's not the seamless background broadband connectivity ASTS is aiming for, and it arguably needs specific hardware integration in the iPhone too.
So different categories.
A different category. Probably the most direct competitor in terms of model is Link Global. They also aim for direct-to-standard phone connectivity using a similar cell tower in the sky concept.
Okay, Link. How do they compare?
Link has achieved some technical milestones too, but ASTS appears to hold significant advantages currently in terms of scale, the size of their planned satellites and constellation, the amount of capital raised, and again, critically, access to that valuable licensed spectrum through their MNO partnerships.
Spectrum keeps coming up as the critical asset. It's the lifeblood of any wireless communication. What specific steps has ASTS taken to lock down the frequencies they need, beyond just partnering with MNOs who hold licenses?
They've made some very aggressive and expensive moves to secure their own spectrum access, particularly in crucial mid-band frequencies that are good for capacity.
Like what?
Well, in the US and Canada, they secured court approval for long-term access to up to 45 megahertz of L-band spectrum. That's considered premium lower mid-band spectrum, really good for mobile broadband.
How to get at that?
Through a deal with a company called Legato Networks. It wasn't cheap, though. Reports suggested they paid something like $350 million upfront, plus ongoing annual payments of around $80 million. But it locks in access to a very valuable chunk of spectrum.
A major investment just for spectrum rights.
Shows how critical it is, and they didn't stop there. They've also broadened their spectrum strategy by striking an agreement to acquire priority rights to 60 megahertz of global S-band spectrum as well.
So they're securing both L-band and S-band. Why both?
The whole strategy relies on something they call dual-band aggregation. Think of it like having different types of roads for data.
Okay.
The low-band spectrum they access through MNO partners, like that 700, 850 megahertz, that's like the country road, it gets you everywhere, provides that basic coverage, penetrates deep into buildings and remote areas, ensures connectivity.
Got it. Wide reach.
Then the mid-band spectrum, the L-band and S-band, they're securing themselves. That's like the multi-lane highway. It provides the capacity, the bandwidth, the speed. It allows for densification in areas with more users.
So you need both working together. Low band for coverage, mid band for speed and capacity.
Exactly. Being able to aggregate or combine both simultaneously is what's critical for delivering those really high peak data speeds they're targeting, like that 120 millipiece figure.
Yeah.
You need both the reach and the capacity working in tandem.
That makes sense. But relying on licensed spectrum, needing partnerships in potentially dozens or hundreds of countries, that runs straight into a huge potential roadblock, doesn't it? Regulatory risk. That has historically sunk or severely hampered global communication projects.
That is absolutely this sort of silent killer risk lurking in the background of this entire business model. Technology can be perfect, launches can go flawlessly, but if you can't get the licenses to operate,
You're stuck.
you're stuck. Securing the necessary regulatory approvals, getting landing rights, coordinating spectrum use country by country. It's an incredibly slow, complex, politically sensitive process. You're dealing with dozens, potentially hundreds of different national regulators.
And each one could say no or impose crippling conditions.
Exactly. Any significant failure, delay, or political conflict in securing these regulatory permissions could dramatically impact their rollout schedule, increase their costs exponentially, and potentially limit their global scalability, regardless of how well the technology works or how many satellites they launch. It's a massive ongoing hurdle.
A really significant non-technical risk factor to keep in mind. Okay, let's shift focus now to the human element behind all this. Given the sheer complexity, the astronomical capital involved, the technical hurdles, the regulatory minefield, the quality and, maybe just as importantly, the commitment of the leadership team feels paramount. Let's start at the top with the founder, chairman, and CEO, Abel Avellan.
Avellan is undeniably the driving force, the central visionary behind ASTS. And crucially, he's not just a dreamer. He brings a very relevant track record.
What is his background?
He previously founded and successfully led another satellite communications company called Emerging Markets Communications, or EMC. He built that company up and eventually sold it for $550 million.
Okay, so he's navigated the satellite comms industry before, successfully exited a venture. That's valuable experience.
Extremely valuable. It shows he understands the unique challenges of this sector, how to build the tech, operate the network, and critically, how to actually monetize it and create a viable business.
But beyond the experience, there's something else about Avellan's relationship with ASTS that really stands out, isn't there? Something that provides a lot of comfort, I think, to investors looking at the risks.
You're probably talking about his personal commitment and alignment.
Exactly.
Yeah, it's quite remarkable, actually, and pretty rare in public companies today. Avellan is the largest individual shareholder in ASTS. He owns approximately 27% of the company's capital stock.
Over a quarter of the company.
Right. And the alignment goes even further. He explicitly receives no salary from the company. Zero.
No salary. At all.
None. His entire personal financial upside is directly and solely tied to the long-term appreciation of ASTS stock value. If the stock does well, he becomes wealthy. If it doesn't, he gets nothing for his time and effort.
Wow. That is about as strong an alignment between a founder CEO's incentives and the interests of all other shareholders as you could possibly design. His skin is fully in the game.
Completely. His personal fortune rises and falls directly with the company's success. You don't see that level of commitment very often. It definitely signals a profound belief in the long-term vision.
It's hard to argue with that kind of alignment. Now, who else is on the executive team helping him drive this incredibly complex operation, especially through that commercialization pivot we talked about?
They've assembled a team that seems designed to cover both the deep technical challenges and the demanding financial and strategic needs. You've got Andrew Johnson, who serves as both CFO and Chief Legal Officer. He brings about 25 years of experience, apparently, working in high-growth tech and telecom companies.
Okay, finance and legal covered.
Then there's Scott Wisniewski. He's now president and retains the Chief Strategy Officer title. He seems to be the financing expert. The one leading the charge on raising capital reports suggest he's already raised over $600 million for ASTS during his tenure.
The money guy.
Yeah.
Essential.
Absolutely essential in this phase. And on the deep tech side, you have Dr. Huaiwen Yao as the Chief Technology Officer, the CTO. He reportedly brings around 30 years of hardcore satellite engineering experience.
So a mix of financial acumen, strategic leadership, and deep technical expertise.
That appears to be the goal. And remember, that mid-2024 leadership restructuring, putting Wisniewski in as president, bringing in Shanti Gupta as chief operating officer.
Right, that pivot signal.
Exactly. That was a very clear move to bolster the operational and commercial execution side of the house. It signaled a deliberate shift in focus from just inventing the technology to actually building the factory, deploying the constellation efficiently, and most importantly, starting to generate consistent revenue. They are gearing up for operations now, not just R&D.
Logistics, manufacturing, sales.
Yeah.
The less glamorous but absolute critical phase.
Precisely.
Okay, we've covered a lot of ground here. The incredibly ambitious technology, the physics-defying antennas, the proof-of-concept success with BlueWalker 3, the massive scale-up with Block 2.
The huge manufacturing challenge, the vertical integration, the aggressive deployment schedule.
The clever B2B partnership model, the massive MNO alliances, the revenue potential, but also the significant cash burn and financing needs.
Right. And the intense competition, especially from Starlink, but also that key technical edge with low-band spectrum, plus the regulatory hurdles and the leadership commitment.
Let's try and bring this all together now. For our listener, weighing the potential here against the very real risks, what's the bottom line? How should they think about AST SpaceMobile?
Well, this deep dive, I think, makes it pretty clear. AST SpaceMobile is almost the textbook definition of a high-risk, high-reward investment proposition. There's really no ambiguity about that.
Not for the faint of heart.
Definitely not.
Yeah.
It's undeniably a company best suited for investors or even just observers who have a medium to high tolerance for risk. The potential upside, if they succeed, is genuinely enormous, transforming global connectivity. But that upside is counterbalanced by very significant, potentially company-ending risks.
What are the biggest risks in your mind?
Technical execution risk is still there. Building and deploying dozens of these complex satellites flawlessly isn't guaranteed. The capital requirement risk is huge. They need vast sums of money, and delays could force costly financing. And the competitive risk is intense, particularly from SpaceX Starlink, who have that massive head start in orbit and deep pockets. Any one of those could derail the plan.
So if you're following this story, whether as an investor or just someone interested in the future of space and communication, the next year or so, say, the next 12 to 18 months feels absolutely critical. It's the make or break period for execution.
It really is. This is when the rubber meets the road, or perhaps the satellite meets the launch vehicle.
What are the absolute key non-negotiable milestones that people should be watching for during this critical window? What tells us if they're on track or falling behind?
I'd point to three main things. First, keep a very close eye on that manufacturing cadence. Are they actually hitting or getting close to that target of producing 6 satellites per month by late 2025? Avoiding major production hell delays is paramount.
Okay, manufacturing rate. What's second?
Second, watch the launches. Specifically, the successful deployment and operational checkout of these Block 2 BlueBird satellites, starting with FM1 later this year. Every successful launch and commissioning is a huge step forward. Conversely, any launch failure or major satellite malfunction would be a massive technical and financial setback.
Launch success and satellite health. Got it. And third?
Third, look for the start of actual commercial service, even if it's initially intermittent. They're planning to begin offering service in the US by the end of 2025, then expanding to the UK, Japan, and Canada in the first quarter of 2026. Generating that first meaningful commercial revenue, proving customers will pay, and the MNO partnerships work in practice, that will be the ultimate validation of the entire business model.
Production cadence, launch success, and initial commercial revenue. Those are the key indicators for the next 18 months. We started this conversation by highlighting the sheer scale of the problem ASTS is trying to solve. That's a staggering statistic. 42% of the world's population still lacking cellular broadband. The market need is undeniable.
Clearly there. And the core technology direct-to-device from space has now been proven feasible, at least on a prototype scale, by BW3.
But we also have to acknowledge the history here, right? The satellite industry, particularly LEO constellations, has this notorious reputation. It's littered with the wreckage of ambitious projects that were technical marvels but ended up as financial disasters.
Oh, absolutely. That old cynical analyst saying the best way to make a small fortune in satellites is to start with a large one, or the even simpler, never invest in a satellite company. Those warnings exist for very good reasons. Historically, these ventures have been incredibly capital-intensive, operationally complex, and prone to delays and cost overruns that often lead to bankruptcy or painful restructuring.
Iridium being the classic cautionary tale.
Exactly.
Yeah.
Technically brilliant for its time, but financially ruinous initially.
Okay, so that history looms large. Which brings us, I think, to the final provocative thought for you, the listener, to ponder after this deep dive. We've seen the massive financial projections analysts talking about $5 billion in annual revenue by 2030 if things go well. We know the core direct-to-device technology has been demonstrated. So the question is, has the fundamental economic equation for space-based communication finally truly changed this time?
That is the multi-billion-dollar question, isn't it? Has this specific technological approach, pioneered by ASTS, the direct link to standard phones, eliminating the need for costly, specialized user terminals on the ground, finally converge with the other major shift happening in space, the dramatically falling cost of launch?
Right, thanks to providers like SpaceX making access to orbit much cheaper than ever before.
Exactly. Is it possible that this combination, ASTS's proven D2D tech meeting low-cost, reliable launch, will fundamentally break that historical pattern of failure? Could this finally enable the creation of the first truly profitable, globally scalable, space-based cellular network infrastructure, or will history repeat itself?
The answer, it seems, rests heavily on the successful deployment and operation of those first 25 BlueBird satellites, and whether they can reach break-even as planned.
The next 18 months will tell us a huge part of that story.
A genuinely planet-sized challenge, with potentially planet-changing implications if they succeed. Thank you for taking this deep dive with us today.